Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. And my apologies, I'm running 2 or 3 minutes late. Anyway, let's get started. And before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The best way to get in touch with me is through Discord. My name on Discord is Doug P. And in Bookmap Discord, there's an Options-Doug chat channel. That's a great place for your questions, comments, all related to options, order flow, hedging flow, and the impact of the options markets on stocks and futures. I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups today, I will be talking about an underlying asset, and setups can be taken with options, shares of stock, or futures. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat in YouTube for your questions and comments. And for those of you in YouTube, if you have a question after the presentation today, please contact me through Discord, especially the Options-Doug chat channel in Discord. Bookmap Discord is free and available to all, whether you have a Bookmap subscription or not. And hello, Holy Trinity, glad you're here, welcome. All right, my agenda for today, I want to cover news items, economic data, events and earnings for today, as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from this morning, and then we'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's start with news items for today. Let me just drag one thing over here. So of course the CPI data came out this morning. Typically a big event. This is the results. Mostly it seemed like to me that it was higher than forecast and higher than previous. There are, I guess, a variety of measures, year over year, month over month, actual and core. All right, so that is the CPI data. Again, it appears to me that it was hotter than expected. All right, for the rest of the week, coming up is the PPI and retail sales tomorrow. And then Friday is the September options expiration. It's typically a larger expiration. Every quarter, the monthly options expiration is very large, especially for SPX. And we're just watching this every day. This is the, I'll just show this for SPX. This is the delta notional for the September expiration. Orange bar showing call delta notional. Blue bar showing put delta notional. It's a little bit difficult to tell from just looking at this bar, at the bars, the length of the bars. But if we hover over this, we'll see that the call delta notional is slightly higher than the put delta notional. And this is more pronounced for SPY and QQQ. So again, here's the September 15th, this Friday, expiration for SPY and QQQ. So we're coming up to a call-dominated options expiration. And then also on Friday, Michigan Consumer Sentiment comes out at 10 a.m. All right, let's take a look at my positional analysis now. I'm going to start with the S&P 500. And before I take a closer look at this Bookmap chart of ES futures, I'm going to take a look at a larger time frame. This is the SPX in a 30-day 1-hour chart, just showing price and key levels. So first of all, here is the August expiration, a slightly put-dominated, very negative gamma expiration. So puts expired, market makers could buy back short hedges, and that helped to fuel a rally up to the point where all of that negative gamma was extinguished. The options market makers' position on the gamma curve for SPX became positive for a while and now has shifted back to negative. And if the rally continues today, it may shift back to positive today. We'll take a closer look at that in just a minute. All right, so that is the price action after the August options expiration. Now let's take a look at some levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. It's available, should be available in any trading platform that has an options chain. And then the dashed blue lines are showing the upper and lower daily expected move. Again, this is based on the options market. And note this, excuse me, this number was quite a bit higher for today compared to yesterday. So the options market was anticipating a much wider move in the SPX versus yesterday. So the options expiration for today was pricing in about a plus or minus 30 point move for today. And then for yesterday, that was at plus or minus 20 points. So 50% increase over the expected move from today versus yesterday due to the CPI report. And SPX is trading well within that range. So selling an iron condor around the upper and lower daily expected move would have been a good trade today so far. All right, let's take a look at the Spotgamma levels on this chart. That's the dark red lines showing Spotgamma levels. These are proprietary Spotgamma levels, gamma-weighted open interest available to Spotgamma subscribers. I'm going to go over the key daily levels. First of all, there's the put wall at 4,400. That's a strike with the largest net negative gamma that can be expected to act as support. And next up is the 4,450 absolute gamma strike. That's the strike with the largest absolute negative and positive gamma. And note that level did shift lower from yesterday, from 4,500 yesterday to 4,450 today. The next level up is the volatility trigger. That is Spotgamma's proprietary gamma flip level. Below that level, like SPX is trading now, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue volatility. And then finally, the next level up is kind of an odd one. This is the call wall at 45.25. That's kind of an odd strike. Usually the call wall is at a 0 or a 50 level. And that is most likely just temporary. The call wall is the strike with the largest net positive gamma. That can be expected to act as resistance. So 4,400 is the floor, and right now today 45.25 is the ceiling, and that level did move lower. So for SPX, the call wall and absolute gamma strikes both move lower, and then the volatility trigger did move slightly higher from 44.80 to 85 today. All right, so overall I would say bearish shifts lower in the SPX, again for the call wall and the absolute gamma strike. All right, let's take a look at another SPX chart just for today to take a look at the levels in play for today. Note that trend line I drew on the 30-day chart did that was pretty close, did act as support today. And then here's the volatility trigger up here at 44.85, and price has oscillated quite a bit around the 44.75 now, moving higher up toward the 44.85 volatility trigger. All right, this is the ES futures in Bookmap. I've got my own cloud notes here. I'm showing SPX levels. So there's the 44.85 volatility trigger for SPX. Note there's a pretty large price difference between ES and SPX. Right now it's 50 points for the December contract, the Z contract for ES. So ESZ minus SPX today is about 50 points. That's what I'm using. All right, so SPX levels, I also have SPY levels. There's the 445 level that did act around that level, acted as support. Price bounced, did not quite make it down to that level before moving higher. Here's the SPY 446 volatility trigger. And then the SPY 447 level, around that level, acted as resistance earlier today at the open. That was a good entry point for a short setup this morning. We'll talk about that in a few minutes. All right, so those are the levels in play for the S&P 500 today. And shifts in levels for SPY, the volatility trigger did shift lower 1 point to 446 today. That's shown here again. So slight shift lower in levels for SPY, and then for SPX, again, the call wall and absolute gamma strike did shift lower. All right, let's take a look at Nasdaq. We'll go to NQ futures. Let's take a quick look at a QQQ chart. So the only gamma level in play for today is the volatility trigger at 375. That level did move lower from yesterday. Note the 372, the round number level, did act as support earlier today. That's QQQ. Again, the key point here is price now is above the volatility trigger, and the 372 level acted as support this morning. Let's take a look at an NDX chart. So now NDX is trading above its volatility trigger as well at 380, 15,380. Let's go back to Bookmap, go to NQ Futures. So again, I have my own cloud notes here. I'm showing QQQ levels. There's the 372 that did act as support. The 375 volatility trigger. And just above that is the 15,380 NDX volatility trigger. And note there is a pretty big difference between NQ and NDX. Today I'm using 203 points as the NQ minus NDX difference. And it looks like NQ is heading up towards its upper daily expected move. All right, shifts in levels for the Nasdaq. The volatility trigger for NDX did shift lower at not a significant amount, just 10 points. And for QQQ, again, the volatility trigger shifted lower, put wall shifted higher, but just like SPX, the call wall and absolute gamma strike both shifted lower. So slightly shifts lower, or bearish shifts lower for QQQ as well. And note that does not always work. That information that's based on open interest from yesterday. So all of those positions were placed yesterday in the options market before the CPI data today. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. So this is gamma notional, market makers position on the gamma curve, again at the beginning of the day, for SPX, SPY, NDX, and QQQ. Note all these numbers are negative. And more negative than yesterday. So yesterday, SPX gamma notional was slightly positive, and it shifted to negative today. And for SPY and QQQ, those numbers were negative yesterday and shifted to more negative today. So market makers' position on the gamma curve at the beginning of the day today was negative. That means that traders were long puts, and that's to be expected. Traders would buy puts before the CPI report comes out this morning. So traders are long puts, market makers are short puts. And in that environment, they have to trade with price to hedge their delta exposure. So let's take a look and see how that works. So note this is a little bit of a put Vanna fuel. So let's take a look at for a rally today, slight amount. Let's take a look at the Vanna model. Give me just a moment. So what this chart is showing, that's QQQ, sorry about that. I thought I had SPX. All right, let's go to SPX. What this chart is showing is market makers delta notional and how that changes with price. Delta notional shown on the vertical axis, price shown on the horizontal axis. There are two curves on this chart. The light gray curve is showing how market makers delta notional changes with changes in price only, and then the purple curve adds implied volatility to the equation, showing how market makers delta notional changes with changes in price and implied volatility. And that change in delta with the change in implied volatility is the Vanna effect, and Vanna is a second order Greek. So this morning, the low of the day for SPX was about 44.53. So that's right around here. And right now SPX is trading at 44.77, right around here between these two lines. Let's go back to 53. So what this chart is showing is, as price has increased today, implied volatility has dropped. Let's check a chart of the VIX. So a pretty sharp drop in VIX today as a proxy for implied volatility. So there's VIX for today. So again, as price has increased, implied volatility decreased, market makers' delta notional decreases, and they can buy back their short hedges, and that helps to fuel a rally higher. But this is not a lot of put Vanna fuel for a rally. A little bit, but not significant, but still it's still there. And similar for SPY and SPX, and for QQQ, I'm sorry. So Vanna model pretty similar for SPX, SPY, and QQQ. Again, all negative gamma at the beginning of the day, and as price increases, implied volatility drops, market makers can buy back short futures as their delta exposure decreases. Those puts are losing value and their delta notional decreasing, so they can buy back their short futures. All right, let me check for questions. All right, there's I'm not sure how to pronounce your name. Diviang had a question related to the viewing heat map for stocks. Is DXFeed the only subscription that shows stocks heat map, or can you use CBOT from Rhythmic? So Rhythmic provides futures data. And if you're interested in stocks like Apple and Nvidia and Tesla, you either need DXFeed data, that's what I use and recommend, or I believe OmniFeed may be available as well. Again, I use and recommend DXFeed. Most traders I know use DXFeed. It's been around for a long time, very reliable. So DXFeed for stocks, that's what I use. So there's Apple at DXFeed, and then Rhythmic data for futures. And for, if you only trade ES and NQ, for example, all you need is the CME exchange. Hello, Vihu. Welcome. Glad you're here. I'll take a look at Nvidia. Yeah. And you're welcome, DV Inc. Truman asked, do market makers go from negative gamma exposure to positive gamma exposure when the curve moves up to the right? So the curve, the Vanna model, is kind of a reflection of gamma notional. So let's take a look at so this is the actual gamma model, gamma curve. So market makers position on the gamma curve. When I say that, this is what is actually changing. So we know that implied volatility is dropping. Those puts that traders bought are losing value. Market makers' delta notional is decreasing. They're buying back short futures. So if this continues today, I would expect their position on the gamma curve to move more towards the positive end. I don't see any way to expand this. So here's the volatility trigger, the green line there. So market maker's position on the gamma curve in this region would be positive. All right, so when I talk about positive and negative gamma, this is the curve you want to take a look at. And Floyd's Garage says calls expiring Friday you mentioned will be short-term bearish. That's a distinct possibility. Yes, that's something that I will look for. Is just the opposite of a put Vanna rally in a negative gamma put dominated environment. If gamma notional shifts to positive and the call domination is more distinct, I would would look for a short-term pullback after expiration. All right, past 2910. Hello. What do you think of the wicks they left behind today? I'm not sure what that means. If you're talking about candlestick charts, that's not something I look at. So I'm looking at order flow and hedging flow. So, you know, I don't look at candlestick charts. All right, Ford's Garage, you're welcome. All right, let's take a look. That is that's the basis. That's the extent of my positional analysis today. So looking at the levels in play for today, the shifts in levels, bearish for SPX and QQQ. Looking for a little bit higher volatility today, although price is really somewhat range bound. And options traders, especially zero DTE options traders, can have a lot to do with that, with their mean reverting behavior, buying dips and selling highs. And we'll take a look at that in just a minute. So let's get to some setups now. So I'm going to take a look at the hero signal to start. Actually, let me zoom back out, explain what I'm looking at here. This is the hero signal, hedging impact real-time options, and it's showing options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. So again, options trades, market maker hedging activity. The white line is price for SPX. The purple line is the hero signal, again, hedging impact real-time options. So this is showing that traders in SPY, SPX, XSP, and ES futures are taking negative delta positions today. That's shown by this falling purple line. We'll slice and dice this. And take a look at it in closer detail. So let's take a look at some setups first. I'm going to zoom in. Zoom in on the morning session here. So this is the cash open right here, 9:30 a.m. Eastern Time. And note that for maybe just a minute or two, traders were taking positive delta positions. And then they started fading the move, taking negative delta positions. And that set up a great short here, a divergent short, right at 10 a.m. And then right around 10:15 to 10:20, they stopped, started taking positive delta positions, and price rallied. And that was a pretty similar pattern. And we'll take a look at some stocks that reversed higher right at 10:15 as well. And this is very similar to the last couple days. A quick move higher, options traders fade that, setting up a great short as your first trade, and then price finds a bottom. Options traders started taking positive delta positions, and price moves higher. So this pattern repeated today, yesterday, and the day before. So all you had to do to prepare for today is look at yesterday. All right, so let's take a look at Bookmap now. All right, welcome past 2910. Holy Trinity asks, what are my thoughts on SPY today? So whatever form of the S&P 500 I'm trading, whether it's SPY shares, SPY options, ES futures, SPX options, I'm looking at this chart on one screen and the hero chart for the combined signal for S&P 500 on the other chart. On my other screen, I have two screens, actually two computers, two screens on one and one screen on another computer. That's what I'm watching YouTube on right now. So my thoughts on SPY are the same as my thoughts on ES, are the same as my thoughts on SPX. So note, that's why I go to so much effort to get the correct SPY levels and the correct SPX levels on my ES chart, so I can look at one chart and for any S&P 500 instrument. All right, let's zoom in on the morning. So we'll take a look at this, both the short and the long setup. First of all, the short. So there's the quick move higher. Options traders started taking shorts, negative delta positions pretty quickly. Price really makes a series of lower highs, multiple tests of the SPY 447 level. And note that finally aggressive sellers really come in. That's shown by the magenta volume dots. Those are buy minus sell market orders. So with a magenta dot, there are more sellers than buyers. And price moves lower, down pretty quickly down to the SPY 445 level, large gamma 3 level. And then the shift in order flow is pretty distinct here. Somewhat of a, actually let me, I'm going to move this up just a little bit so we can see this a little better. Note, there were some large traders buying with iceberg orders, but these numbers are really insignificant typically for the S&P 500. But they are there, shown by the rising light blue line. And also there are sell stops shown by the small red dots fueling the move lower. And again, these numbers are pretty small for the ES. But the most distinct tell was first of all looking at this 445 level as potential support, seeing a stop run down to that. Large traders buying with iceberg orders, although numbers are not significant, and then aggressive buyers start to come in, shown by the shift from magenta volume dots to green volume dots. Green means there are more buy orders than sell orders. And then this order flow shown in the subchart here all shifts higher. Cumulative volume delta shown by the pink to dark blue line shifting higher. And then the rising yellow line indicates that there are buy stop orders helping to fuel the move higher, back up to the 447 level and beyond. So short setup, those are the clues in order flow as well as hedging flow that we just looked at. and then it looks like price is really just chopped around between, let's say, around this 44.69 zero gamma level and up to ES 45.30. Let's just show the heat map a little bit more. So there is some liquidity at this level. It's shown on the heat map the history of orders in the current order book. Those are limit sell orders and appeared to have been placing a ceiling on price. Looks like they were finally filled here, and now price moved back down to the 447 level. All right, so far this, just looking at the subchart here, so I look at the iceberg orders, stop orders, cumulative volume delta, all rising up until about 11:30 or so, 11:30 or 12, leveling off. All right, let's see what options traders are doing. Let's go back to Hero. All right, so initially it appeared that options traders were taking positive delta positions, but this was somewhat tepid compared with the increase in price. So there were aggressive buyers, buy stop orders, as well as iceberg orders also helping to fuel the move higher. Let's just zoom out. So net for the day, options traders have been taking negative delta positions, as shown by the negative notional value there. All right, let's slice and dice this a little bit. So one thing to notice is after this initial rise higher in Hero, it levels off, then starts to move lower, and price has kind of hit that ES 45.30 level and has consolidated since then. So options traders took their foot off the gas, and now price is consolidating. Let's take a closer look and see what traders are doing. So as usual, they're buying calls. That's shown by the rising orange line. The positive notional value there. They're also buying puts. That's a very steady push down with puts. Let me just get rid of this. So this view provides some clarity. So we know that traders were buying puts from the open. They stopped briefly selling puts. They started buying puts again. Also at the open, they were selling calls, started buying calls, and then as call buyers took their foot off the gas, put buyers continued to buy puts, prices leveled off. All right, let's take a look at one other thing. I'm going to take a look at next expiry. So for the S&P 500, next expiry would be today, the 0 DTE options. So note the very close correlation between 0 DTE, that's shown with the green line here. It's almost identical to the purple line, which is showing all expirations. So this is indicating that the 0 DTE options trades today are making up a large portion of the volume of the options trades today in the S&P 500. And this is about as close as I've ever seen it. So right now the notional value for 0 DTE, the green line, is just right around 1 billion, minus 1 billion, and the purple line is minus 1.26 billion. So that's indicating about 80% of the total volume. Well, what we'll see at the end of the day. Maybe Brent will include that in his note this evening. But anyway, a very large portion of options trades today in the S&P 500 are in 0 DTE options. And so far they're taking negative delta positions. All right, let's turn that off. I'm just going to take a very quick look at Nasdaq. I have taken a little bit too long. So Nasdaq options traders, very clearly taking negative delta positions, fading the move. Let's just zoom in on this chart real quick. So from the open, they were taking negative delta positions. That set up a short right around 10 a.m., just like the S&P 500. Let's go take a look at Bookmap. Oops. All right, Floyd's Garage asks, is there correlation between the P call and the blue puts line? I'm not sure I understand your question. Maybe if you could clarify. So for the S&P 500, we looked at puts and calls for all expirations, and then we looked at all the total signal for all expirations and 0 DTE. All right, so today it's pretty clear after this initial move lower in the Nasdaq that aggressive buyers, shown by the shift from magenta volume dots to green volume dots, as well as iceberg orders and buy stop orders, are what is fueling Nasdaq higher today. I'm looking at all the rising lines here in the subchart. Light blue, iceberg orders. Large traders buying with iceberg orders. Yellow showing buy stop orders, and then the rising dark blue line showing cumulative volume delta rising. So today for Nasdaq options traders, not so much driving price, but aggressive buyers, buy stop orders, and large traders with iceberg orders helping to drive price higher. All right, Floyd's Garage says the previous chart you showed a line for puts. One of the things he looks at is the P call to see the put call ratio. Yeah, you can look at that. I think the hero signal provides a little bit more detail, and especially the history. So when you're looking at the put call ratio, that's for the current. Right, Paz says very good information. Great, glad to hear, glad that helped. Giuliano says, when I see a setup, do I trade futures or options or shares of stock? And I trade all. So I don't have, really don't have a preference. It just has to do with what else I have going on for the day. So that's why I have talked about and I mention every day, I'm going to talk about setups in the S&P 500 using this chart, and it's really up to you. If you want to trade futures, if you if you like the leverage, and you can set a tight stop if you want, or if you're not worried about a precise entry, options trades are a good way to go, either with spreads or naked options. Very good way to go. Not worry about a precise entry and a stop order, defined risk option trades, or shares of stock. If you want to trade smaller, again, not worry about a precise entry and getting stopped out. So that's kind of the way I approach it. But again, I'm talking about setups and underlying assets that can be taken any number of ways, any number of again, stocks, futures, or options. So that's kind of up to you. All right, let's take a quick look at some stocks. And I want to take a look at, so we talked about the reversal higher about 10:15, and we'll see this pattern repeated in several stocks. So I'm going to go to Hero now for Meta. Start with Meta. So this is the total Hero signal for Meta. Note the sharp reversal higher and Hero right around 10:15. Price responds. Zoom in on this a little bit, and we see this was first of all, options traders not really supporting or driving the move lower. And then this divergence happens about 5-6 minutes before price moves higher. So a nice divergence long in Meta there. Let's see what traders are doing. So they continued to buy calls. So they were buying calls from the open. That's shown by the rising orange line. Initially, they were buying puts, and they stopped. They started selling puts, then that activity leveled off, and that's when price started to move higher. When they stopped buying puts, briefly sold puts, and then they just took their foot off the gas with puts. The Hero line for the blue line remains level. All right, so that's Meta. Let's take a look, go to Bookmap again. There's the reversal higher right at 10:15. Next, Microsoft. $10.15 reversal higher. Let's take a look at Hero. Go to Microsoft. Zoom in. So here, Hero makes a higher low, setting up another divergence long right around 10:15. Let's take a look at Tesla. Then we'll go to NVIDIA. Another reversal long here at 10:15. Options traders started taking positive delta positions. Let's just see what they were doing in Tesla. So in Tesla, they were selling puts. That's shown by the rising blue line. They were also selling calls. So this is just kind of opposite of Meta. So they stopped selling calls, started buying calls. So right around 10:15, they were selling puts, buying calls, both both positive delta. Then they start selling calls again, and price, and they stopped selling puts. Price at that point leveled off a bit. So move higher from around 10:15 to around 11:05, something like that. We'll take a look at Bookmap in just a moment. So Slow to Zara, sorry I missed your comment before. Says Netflix had a sharp drop today. News from the CFO, and says Netflix still hanging out at the lows. $23 trading range today. Yeah, if you caught that, that's probably a good move. I don't have Netflix and Bookmap. We'll take a look at Hero in just a moment. So let's go to Bookmap, go to Tesla. So the uptrend in Microsoft continues. Zoom in on this. So here's the reversal higher in Tesla, right around the 269 level. Makes a double bottom there, breaks trend, and then moves higher. All right, V, who wanted to take a look at NVIDIA? Let's take a look at that. Nice strong uptrend in NVIDIA today. Let's go take a look at Hero, and then we'll take a look at Netflix. Let's go to NVIDIA first. So it really looks like call traders. Calls are driving price action in NVIDIA today. So initially traders were buying puts, and then that activity stopped. So they took their foot off the gas, and then right around 10:20, 10:15, 10:20, traders started buying calls, helping to fuel the move higher. So in the case of NVIDIA here, it really helps to separate out puts and calls. So we see that this reversal higher right around the same time as everything else. Traders stopped buying puts, took their foot off the gas, stopped selling calls, started buying calls, and NVIDIA moved higher. Let's go back to Bookmap. So there's the 10:15 move higher. Let's go back and take a look and see if there are any gamma levels in play. So 450 is the hedge wall, the key gamma strike. So that's right here at 450. All right, let's go to Hero. Take a look at Netflix. And it looks like options trades, market maker hedging activity has been a very strong driver of price in Netflix today. and price reversed lower right around the 437.50 hedge wall and the 435 key gamma strike. And that 435 level did act as resistance. So traders are buying puts and selling calls in Netflix. All right, so sorry, when did the news come out? Was that during the day or before the open? All right, Floyd's Garage asks, why would FUTs, I assume you mean futures, be lagging such a move by the index? I'm not sure I understand your question. There should be no lag. So if you're talking about ES versus SPX versus SPY, there is no lag between those instruments. There is constant arbitrage going on. Those differences, the ratios and the price will change a little bit. Right, so sorry, this must be that must be when the news came out right there. All right, so it looks like price action was kind of down then up in Netflix, and then that sharp drop lower came when the news came out that you mentioned. So there it is. Options traders were all over it. All right, let's take a look at the S&P 500. Check on that. Options traders continue to take negative delta positions. Oops, wrong tool. Let's go take a look at Bookmap. So price still stuck around that 447 level. Note the point of control shown by the purple line. You can also see the session volume profile. Most of the volume trading in this range for this session today, which my session begins at the open yesterday afternoon. But of course, all the volume is going to be during the RTH. But there's the point of control shown again by the purple line, wrong tool. Purple line just below the 447 level. Now price is breaking lower. And again, with that constant pressure of traders taking negative delta positions and market makers sell futures, this is what is happening now. And Frank, hello, asked how to use the overall equity hub information for NVIDIA and Tesla, etc., to predict the price moving for the next few days or weeks. That's something that I don't really do, maybe for the next few days. So let's take a look. Let's go to Equity Hub. next few weeks, I don't know how to predict price for next few weeks. But we can get a sense of let's take a look at NVIDIA. First of all, we can take a look at this history of the key daily levels. So I don't see much in here that is giving me any clue for what may happen in the next few days. The key gamma strike has remained at 450 for the last 3 days. Hedge wall has dropped slightly lower, but still at 450. In the entire 10 days, the call wall has remained, this is 10-day history, call wall has remained at 500, and the put wall has remained at 440 for the last 3 days. No clue there. So let's take a look at one other thing here. So we know that a big options expiration is coming up on Friday. So we can, and we'll take a closer look at this tomorrow and on Friday. So we can rank stocks on the watch list by next expiry gamma percent. And also we can see that all of these stocks, this top gamma expiry, this is all Friday, 9/15. And we're going to focus on stocks with greater than 30%. So there's quite a few there. Netflix at the top, Apple at the bottom, all greater than 30%, gamma expiring on Friday. The next thing we want to do is get a sense of calls and puts. So let's take a look. Take a look at Netflix. Let's take a look at this chart first. Let's also take a look at composite view. So it's really all put dominated, but there are some calls. Certainly going to be some calls that that are going to expire on Friday. Let's take a look at another one, maybe. Let's rank this again. Video. A lot of calls. Yeah. Maybe this might be easier to look at. So here's Meta. Here's a good one. Call dominated above 308 with almost 42% of gamma expiring on Friday. So this gives us a clue that on Friday, if traders are not buying calls, forcing market makers to sell calls and buy stock to hedge their delta exposure, the calls that are already there's already some call open interest here, and those calls, again, a lot expiring on Friday, will start to lose value due to charm. That is the change in delta with the change in price, change in delta as time passes. So they'll lose delta, lose value. Market makers can sell their long stock hedges. All right, so that is something that you can take a look at in Equity Hub. Frank, I hope that helps, but I don't know of any way of looking at Equity Hub to predict price moving for the next few weeks, certainly, but you know, we can certainly see what price has been doing for the last few days. All right, let me check for final questions here. And Giuliano says, when you are trading futures, how do you place your stop orders? I usually get stopped out often with a 2-point stop. I often use a 2-point stop as well, and that's a big problem with trading futures. That's why I like to trade SPY shares. I can trade smaller more often and have a wider stop, or also trade options and not worry about a stop trade, defined risk trade. So with shares of stock, depending on your broker, there are no commissions, very small exchange fee. I think there's an advantage. Again, I don't worry about stops or I have a much wider stop for shares, and then for options, if I'm buying a put or a call, that's defined risk. I don't have any stop order. I don't worry about it. I prefer to trade spreads. You can check the Tasty Live Zero DTE series. They talked about, I think the last week or two, about trading naked long options versus spreads. Good thing to take a look at. And RK Cat 5959, hello. Hello, glad you're here. Says he's from Thailand. Want to ask, is there an online platform where I can trade U.S. stock options as a foreigner? Sorry, I don't know that. I trade options on Thinkorswim and Tasty Trade. I don't know if they're available to traders in Thailand or not. All right, TV says he sees 4 blue iceberg orders. Let's go take a look at Bookmap. On ES at 1345. So sorry, I don't see that on my chart. These are, let me just point out, that blue icon there, that is 186 contracts executed. That's not at the time you were talking about, but that's buy iceberg orders. I use blue and the number below price to indicate buy iceberg orders. Here's sell iceberg orders. That's shown by the magenta icon, and then the icon above price. All right. RD Champion asks, can I show SPX Gamma? Yeah, I can take a look at that. Truman asks, how often is the composite view updated? That is, it's updated once daily. Everything in Equity Hub is updated once daily during the night. That information is based on open interest, which is provided sometime during the night by OCC, the Options Clearing Corp. All right, Giuliano says he saw that segment from Tracy Trade. Yeah, if you're getting stopped out with futures, either place a wider stop, have a higher risk tolerance, or shift to shares or options. All right, let's take a look at SPX Gamma. Oops. All right, so I assume this is what you're looking for. RD Champion, here's SPX Gamma. Note the concentration of Gamma between 4,400 and 4,500. Oops, wrong tool again. 4,400 and 4,500. and that could very well change after options expiration on Friday. So let's go back to Bookmap. So we see ES still chopping up and down around the 447 level. Nasdaq still chopping around the 375 level. That is the volatility trigger for QQQ. All right, RD Champion, you're welcome, and Giuliano, you're welcome. All right, my time is past. I need to wrap it up. I want to thank everyone for watching. Thank you very much for your questions and comments. Again, if you have questions, comments after the presentation, Options-Doug chat channel in the Bookmap Discord is a great place to post. Also, I'm on Discord, Doug P. Again, thank you very much for watching. Thanks for your questions and comments, and I will see you tomorrow. Thanks again. Bye.